Had a nice day here in Houston, Texas. It was relatively cool. It was only up to 65 degrees or so, I think, today. All right, so can everybody hear me all right? All right, good. Just wanted to make sure. All right. Well, as we can see, this market is in no hurry to go anywhere. We had the opportunity for this scoop type action to break out, which it didn't. Stochastics have gone flat. Let's see, we don't need whatever that little chart is. What is that chart? I don't know how that got on there. The S&P. Kind of failed at this level. So we're sideways. Even though there was potential in the Dow, the NASDAQ is essentially telling us we're probably coming back at least to test the 50, which would equate to this level right here. Because we've got there's our left-right combo, doji, bearish engulfing signal, close right on the T-line. Now we're getting this gap down. I would suspect we're heading this way, even if they took it up tomorrow. I think we're still caught in a sideways motion. So with that, let's see, I didn't even have a chance to go through, and I apologize this last couple of weeks where we haven't had the follow-ups. Just by the time I get ready to do them at night, my head was so foggy. You can't see the symbol because I probably have it. Oh, that's not what we do. Let's go this way. Yep, now I got to redo the charts. Hold on for a second. So the follow-ups will be starting again, hopefully tonight. All right, is that good? Yeah, I try not to have it happen too often. Okay, you had it right, Jim. Yep. So, where are we? Crude oil. Crude oil is still in this downtrend. Maybe we need to make these things smaller so we can get a better orientation of where. So as long as they can't get it up above the T-line, we're in a downtrend. Gold. Gold is right there. I mean, right now we have to kind of see how they open it tomorrow. Either they take it back up and we're still in a slow uptrend, or if they start taking it down, I would put your Fibonacci number on here, which I think I can do. Say this is the absolute bottom. This is the absolute top. The Fibonacci numbers look like they would meet up here at the 50 or right in here. That's where we could have a retracement. Trying to see, looks like there's probably a wee little teeny gap right about in here. What was that? That was gold. Silver, same scenario, kind of your doji, gap down through the T-line, now another gap down. They could be coming back to fill this gap right here. Any way you can get rid of that curtain that's at the top. The curtain. Curtain. This right here. Gold Trader, I don't know what the curtain is. Oh. That's something that's apparently stuck on yours because that curtain is gone. All right, because I think, unless yeah, it's gone, so it might be stuck on yours. Okay. Yeah, it must be my shower curtain. Okay, what else we got to take a look at? The grains have starting to back off a little bit. Wheat has just been in a slow, steady decline. Soybeans have pulled back, but they're looking like they're starting to get a little bit bottomish here. We got a Morningstar type signal, doji. This would be a perfect spot to use a buy stop for anything above the T line. And notice that's after hours, but we have a doji, and then this is the trading so far after hours. And your stochastics are down there in the oversold area. That right there kind of gives you the impression that they've stopped the downtrend. Now there might be a pop to the upside. Hogs acted well today, but pulled back. And right now they've opened up a little bit, but pulled back again. I think they're still in an uptrend. I've moved money from the hogs over to the cattle because it looked like it had a little J-hook pattern setting up with the next target up here at the 50. And DXAZ, the dollar, still in the bottoming stages, just hasn't got moving yet. Okay, let's get rid of all this. But it's trying. This might be a slow move up, and now we've got a little potential Morningstar, but this day has to, or what trading they're doing now, has to come up and close above the T line. Let's see. Cocoa, still in a downtrend. Sugar, nothing too much there, except notice what we're getting. We're getting a lot of hanging man signals up here. Stochastics in the overbought area. Put a sell stop right below the T line. If it comes down through there again, probably you're going to be seeing some selling, obviously. Let's see. 10-year note. Stuck in this pennant formation, which means they're not going anywhere with interest rates for a while. So, let's see, is there anything else on the commodity side that I've missed? The only thing I can think of is orange juice. Looks like it's in a bearish J-hook pattern. Okay. We recommended MM today because of this rounding bottom. Anytime you notice all the dojis in here, then they made a decision on Friday. That told us if there was any positive trading today, you wanted to be buying because I mean that's just investor sentiment building up. There was a couple more like that. What was it? Let's see. AFFY. AFFY is setting up also nicely, coming out of a rounding bottom. It didn't execute today. However, it's given us an opportunity to get set. I would have bought it today on positive trading. That would have told us they were breaking it out. They did some consolidation. However, I will still buy it based upon it trading up above the high of this day here, because that still tells us we're breaking out of this rounding bottom. And GRPN showed us some evidence of the rounding bottom breakout on Friday. with a close right on the 50-day moving average. Made it simple. If they opened it and traded it higher, but in this case they didn't open it higher. They opened it lower. But this makes it very easy. If we know we're in an uptrend and they open it lower, if you start seeing them buying and they come back up through the previous day's close, that tells you the bulls are still there. That's a very good entry spot to get in because you know the momentum's going with you as they're coming up through that level. Still like this one, and for the fact that it could get up here in this range to fill that gap. BONT. Probably should have been closed out today, but it wouldn't hurt to give it one more day to see if they're doing a J-hook. Remember, this was kind of a bounce off the 50, starting to take it back up. If they open this lower and start taking it down, you want to get out of it. And the reason for that is this could be assumed that it bounced off the 50, but as you notice, it didn't quite touch the 50. They may be bringing it right back down to touch the 50 and do a double bottom to take it back up. All right. Okay, I'm going to read this out loud, John. I'm having problems with when to stay, when to cut. Think others are too. The stocks that qualify are SSH, BONT, WPRT. They move enough, and they seem to be close to the T-line. Feel that they can go up soon. Please advise. Also, different way. DDD was high, back down. I think. Well, bounce off. Thanks. All right. Well, let's take a look at a few of those then. SSH. Who typed that? SSH had the big move up, but now you got to kind of take into all your factors here. This was a very nice scoop pattern. However, that's a nice bearish belt hold that brought us right back down into the range and closed below the T-line. That alone probably should have had you out of the position. Now, does that mean you're out of the position for good? No, you let it see what it does. There's nothing, it does have yes, a low volume stock, but there's nothing wrong with selling and being ready to buy right back again. And that, again, that is part of the emotional attributes of investing that is hard for most people, is selling and then buying back. Because selling at a loss in our own minds tells us, well, we lost that one, we're losers. It's not. Each trade is going to move the way it's supposed to move. We don't know what the way that is. So if it's not moving the correct way, just close out the position. When it starts moving correctly, you buy it back. Nobody is ever going to come in and say, man, you took 3 little losses on this trade before you made your 40% on the total trade at the end of the year. I can bet you dime to donuts that at the end of the year, you're not even going to have anybody look at what money you made or lost and where it was. The bottom or the only result that you want at the end of the year is that you made a lot more money than what you lost. So getting into a position and getting back out of a position shouldn't be an emotional white flag. It should be your strategy to say, I'm in a position when it looks like it's time to be buying. I'm out of a position when it looks like it's time to be out. Now, we can say that because there are so many trading programs that you don't have the visual capability of seeing when you should be in or when you should be out. They just don't have it's not built into that trading program. Candlesticks is all visual. It tells you when it's time to be in and when it's time to be out. So having that ability to see when it's time to be out, do it, because that's what the chart is telling you. There's been many times where I've bought here or even bought here and sold here and then bought back here or even bought back here because it told me to get out when it was time to get out. It told me to get in when it was time to get back in. Okay, let's see. Loss and buying back. We'll explain in third book. Okay, thank you, Jerry. And thank you, Betsy. Speaking of which, we will be doing the private trading sessions scheduled for November 2nd, 3rd, and 4th. I've had people express interest. If you're interested in it, where the accommodations probably won't be as fun as Keuka Lake. But we will have it here in Houston, and so if you're interested, get with me as soon as possible. It's from what it looked like, people that couldn't get into Keuka Lake were interested in down here, so we might have the second, third, fourth already filled. And if so, we will do another session the next weekend. And that doesn't leave everybody out of Keuka Lake, because probably sometime during the summer, if I can get a house big enough, we will have a review session on the lake, and everybody that took the private session training would come up for a review session. So, but if you're interested in the private training sessions, email Steve at Candlestick Forum with your phone number, and we'll Steve at candlestickforum.com. Send me your phone number. We'll get on and figure out what the best is for everybody. So anyways, SSH, be out of it. Now, I know that that kind of whiffled a few people when we were in. We can't even bring this one up, can we? S.SRPT. Oh, it's on here now. All right. And this is one where I'm going to go deeper into patterns. That one of the patterns results of a fry pan bottom is sometimes they have a day that they take it down, and then the next day or two they slingshot it out, just like they were coming out of the fry pan, but they do it with kind of a slingshot action. So this was the right thing to do, was to close this on that day. I closed half our positions, figuring I'd be buying it back the next day. So got some good there. But we're going to go into, I'm going to go into heavier at the end of a pattern, what we should expect, what the different results are. There'll be a lake thing to be a level 2 Steve-isms, all right? Your SRPT chart doesn't match any of mine. Let's see. Let's try this. How different is it? Linda, when we're talking about buying and selling on the charts, we're talking about the stocks. The option plays are based upon what the stock is doing. So that's a completely different topic. So there will be situations where most people are going to buy, anyways, this is what it looks like here, and this is what it looks like here. I don't know what, yeah, remember did I do it right? Yeah, I got SRPT. There's also, yes, an SPRT, not to be confused. Looks like that. All right, so gotta figure out. Now we couldn't up until right now. Yeah, I don't know what the difference would be. Okay, let me take a look at this. Sometimes I enter trades a bit late in an initial up move for a swing trade. Then after you say I wouldn't be afraid to be buying this one. Then money management gets me out in another day or so before we get to the T line. Any advice? Let's see, Rick. The lateness, I'm sure most people are running into was kind of the same story I just conveyed to one of our investors, that when I started learning candlesticks and I was doing my own trading and I would see a buy setup. I want to get off this screen so we can get something better to look at. Anyways, we made good money on this trade, obviously, with the half position. And so what I discovered was I would find a nice buy signal, and I say, all right, I'm going to watch this and see whether it works, and it would work. Then I'd come across another buy signal and say, I'm going to watch this. I want to see whether it works or not, and it would work. Then the next one would come along. So I'm going to watch this and see. And then I thought to myself, why are you going to watch this? You know, based upon what the Japanese rice traders have told us, which is hopefully what I've somewhat conveyed to everybody, is that if you see a certain setup, you have a high probability of what's going to happen next. So it's not that you have to wait and see what it's going to do the next day or the next 2 days. It's simply as simple as right here, you see a buy signal. If it trades positive, you want to buy it. You don't have to worry about buying a quarter, then a quarter, then a quarter. Just buy it. Now you've gotten rid of the major part of your decision. The decision was if this did something, or if something occurred after the signal that would indicate that you have a high probability of making money, you only have one decision to make. Buy it. Then after that, whatever it does, the probabilities say we should make money with it, but I don't have to worry about that, whether I'm buying more or going to buy up here. I've bought when it was time to buy at hopefully the earliest stage. Now my next decision is, where should I be out of this if it doesn't work? So I've discovered that a lot of people will say, all right, I buy some here and I buy some here and I buy some here, and then all of a sudden it takes a correction, but my cost is way up here when my cost should be way down here somewhere, and so I'm not making as good a decisions of what to do on getting out. And I will try to go back into or kind of do a more sophisticated entry and exit strategy session here pretty soon. Just so that we know what's going on, between now and the end of the year, we still have some guest speakers coming in. We're going to have Al Brooks come back next Monday. So we're going to open up the room that day to have everybody come in, just because we got goofed up last time. But during October, November, we'll have some guest speakers. But then during December, we're probably going to use that month also for members, just to do private trainings, like a day for entry and exit strategies. We'll do another stop loss. October 27th, we're going to be doing a 2 hour scanning session, so that we know how to do the scans and then how to cultivate the best trades for the next day. So now I kind of got off topic here. This all was leading to that in December, we probably won't have very many guest speakers. We will probably have that month more reserved for doing trainings for the members. Why would you have had it? William, because we were buying it based on the fry pan bottom. Let me make this a little bit steeper. All right, as you can see, it came up. Then you had this fry pan bottom, doji, a close above the T line, bullish confirmation, and then a gap up through this level, which is where we would have, a lot of people got in. And then this day right here was that reaction day, which I should have spent more time, except I was feeling like a piece of you-know-what. I would have come back in and said, all right, you probably want to hold this for one more day, because part of fry pan bottom reaction is that you get kind of that whipsaw action. And I would have probably suggested to people, don't sell it here, or if you're going to sell only half your position. And if it does come back up, buy the other half. So that's the reason we would have been in this, because it was doing a nice fry pan bottom setup. Would you rather have training than guest speakers? Oh, would rather have training than guest speakers. All right. And Roy, send me your phone number so we can talk. I'll try to get Tina back for a night. Okay. Is SRPT still short? I don't think so. I think what it's doing is coming back toward the T line. So I would watch it over the next day or so, probably even tomorrow. Let's do this. Because you got to remember what the message was. That's the bad chart. That's the bad chart. I can't figure out what the difference is between that chart and that chart. Aren't they the same? Oh, incorrect prices. Oh, let's see. No, looks like the same prices. All right. The open price is probably going to be different, only because of wherever the the different feeds for the different. Hasn't begun filling the gap yet. Let's take a look over here. You are absolutely right. All right, they opened this one on this feed opened it at 31.80. All right, that's Warden Brothers feed. Over here shows that they opened it at 38.11. So I have no answer for that. Yeah, this one should have shown that it opened somewhere down here. Yeah, so use the TCNet chart. If it opened down here, yes, you might have a methods rising set up. But I would suspect you're going to see a hammer bounce off the T line, and then if they start buying after that, that tells you the profit taking's over. Yes, I remember because I think I got out right at about that level, thinking, boy, what a hero I was. I said it to myself, though, because if I said that to anybody else, they'd say, yeah, you are a hero. Let's see, what are we looking at now? All right, let's take a look. AFFY, we did this one. All right, rounded bottom. HMA, you want to stay short. This is, again, recognizing what type of signals you're having right here. And whenever they gap down below the T line, you start watching to see if they can get back up above. If they can't, they're taking it down. Jerry, that's only from the charting service. They're all delayed 15 minutes on the stocks, but it doesn't matter since they're all closed. So I have the delayed here because I use TCNet for the or Metastock for the live trade on stocks. I only use the live trades here on my commodities. Do fry pan bottoms normally have a pullback after the buy signal? Not necessarily, but that's what I'm going to go back or go into more. They occasionally, and I'm trying to think of some in the past, where just after the fry pan bottom, they have a big down day, then they have a doji day, and then they start taking it up strong after that. Yeah, Kunar, again, they just recently, remember, we couldn't get SRPT over on these charts not too long ago for whatever reason. And so if they may have just added this recently and they may not have all the correct data in there. So anyways, I will be doing more on what to expect at the end of each pattern. All right, let's see. What do we have here? A flutter kicker. Oh, that was stretching it, but this is just the fact that you can kind of see that you almost have a kicker type signal here where you had a down day. They gapped it open above the previous day. And then this day, this kind of tells you there's been a change. So I wouldn't be afraid to be buying this one, especially if they open it positive, and then just make sure they don't close it back below the 50. Same scenario in MCP or MPC. You had a down day, you had a doji, which means if they open this positive tomorrow, you've got a flutter kicker starting. You want to be buying immediately. Let's see, ANF, left-right combo. Now we're going to be doing a day trading session tomorrow evening, right? This would be one of the illustrations that I would show for a day trade. You've got a left-right combination. You closed right on the T line. Your stochastics are in the oversold area. If this opens positive, what are you getting confirmed on? Number one, you're getting confirmed on a left-right combo. Number two, they're showing you they're not going to stay below the T line anymore, and you're already in the sold area. If this opens positive, even as a day trader, you can buy this with the anticipation that you're at least going to be trading positive. Now, the two things that we want to know about when we're day trading or doing a day trade is, number one, is it the 10th? Oh, let me take a gander here. You're right. It is the 10th. So it's Wednesday. All right. But that would be part of this would be a perfect day trade setup, because if it opens positive, the resistance level is gone, the T line, and it's confirming a very strong buy signal. Am I going to make lots of money? I don't know that. I just know that on this one I'll probably be making money. And where's my next logical target? Probably right up here to the 50. So if that's a whatever percent move, I'm going to go ahead and take it. All right. Yes, I goofed up. The day trading is on Wednesday. Okay, Netflix. Long term, it's heading down. Short term, there's the Doji gap up. And this is your Doji sandwich. Notice when they opened up this positive after a Doji, what's your best friend? A gap up after a Doji. And it's setting up Doji sandwich, number 2. Number 3, it's gapping out of this range right here. Number 4, it went right through the 50, told us that wasn't going to be a resistance anymore. And so anyway, there's lots of reasons to be owning this, except now you've got gap ups. I would anticipate that you would be heading for the 200-day moving average. But you've got gap ups, you're in the overbought area. If I owned Netflix, which I don't, I would have put a sell stop right here at the low of today. If it comes back down through there, they're bringing it back down to the T line. Okay, let's see. Here's another good-looking chart. GTIV. Again, as many things as you can put in order. We know that the 50 is a main target. It comes right back to the 50. Does a doji, bullish engulfing, left-right combination, bouncing right off the 50. Stochastics coming up, closes above the T line. There aren't too many more reasons why you shouldn't be buying this stock. I'd be buying it on a positive open tomorrow, and I think that is probably going to be seen tonight in your recommended stocks, because if this one gets moving, what is our upside potential? If it moved from 6 to 13, $7, I think you're probably looking at about the $18 price range. So you can either buy the stock, or you can get real fancy-dancy, and if there's a 12.5, you probably got a couple of different call spreads up there that would be very attractive at this point, with the anticipation that we're going to be going into wave 3. Where is your initial stop loss on Doji gap up day? Where is your initial stop loss on Doji gap up day on Netflix? Probably back below the, if I was buying here and it started up, I'd use the open, that it shouldn't come back down through there. If I was buying here, I still wouldn't want to see it come back down through this level. Why so much leniency? Because you just had a doji gap up coming out of the oversold area. Your probabilities you're going this way, it would take a lot to negate that strong buy signal. Yeah, Kramer, I think there was even websites where when Kramer recommended something, they would all go short the other way. We did that on, not we did that, but we were watching that on, what was it, DVAX, that Kramer recommended it right here, which has to make you wonder if this is a good-looking stock or had good things going for it, what would induce somebody to recommend it here when only 3 weeks earlier it was trading down here 50% below where it was up here? Anyways, that's just a rhetorical question. That was true too. The GTIV options are not that liquid. Sorry about that. AKAM, another rounding bottom. Started out nicely today, but faded back. But this one's still an easy one that if you buy it on positive trading, we should be coming out of this rounding bottom going higher. And then again, just use the T-line as your stop, because if it came back down through there, it would be breaking the trajectory of this rounding bottom. Yes, previous highs and lows are a spot that everybody's watching to see if it's going to be a support or resistance level. At what point in the pattern do you start using halfway down a candle as your stop? Usually right at the beginning of a trade, because it's trying it's usually at the beginning of a trade because you're trying to get the sellers out of the way, or you should be getting rid of the strength. I'm trying to find the chart where you can use that as an example. So, for example, if this is my signal, it tells me it's time to buy, and I buy up here, I don't want to see it close more than halfway down this candle, because that tells me the bears are still in control. Now, once a price has moved, I'll be a little bit more lenient, because usually a trend is going to continue to move in that direction until it gets to the overbought area. Then I start using the previous day's low as my stop and a halfway point of a candle if I'm in the overbought area on the close. Did I explain that clear enough, Cheryl? Probably I should have had charts up. Whoops, that's heating oil. I'm going to see if we can pick out a spot that... Here's one, for example, that we've got kind of a pointing star type signal. It opens positive the next day. It should be going this way. When it closed more than halfway down this candle and couldn't get through the T-line, that tells me the bears are still in control. Is there a doji gap up formula? Certainly. Jack, I would just ask for that if you're in the chat room tomorrow. Just ask that. Somebody's got it somewhere. I might even have it somewhere. Let's see. I'm getting off track here. All right, hold the individual stock ones until I get done here, or we'll be here until who knows when. This one you want to keep on your watch list because you can see what type of pattern is setting up. That scoop type pattern setting up. You can start buying this, especially if they bring it up through the T-line after the inverted hammer type signal, with the idea that once it gets up into this range, then you watch, and then getting up into this range would mean it has to get through the 50. So first you watch to see if it gets through the 50. It does get through the 50, then you know you probably have a good slingshot action coming out. Let's see. All right, let's zing through here. We did Vivus, S.TPX. This one's still a good-looking chart. And the reason it's a good-looking chart is notice how it started. With a huge gap up. Consolidation, a double doji, left-right combo, told us the selling or profit-taking was over. This is what told us that there was going to be a strong force pushing this one up. What I would suspect you're going to see is it's going to move up into this range and then do a 45 off of there, which would be the same trajectory as what the previous trend was. Let's see. Oh, this is again, the reason we like these type of charts, like GTIV, is because it's using the 50 as a support, which everybody in the world is watching to see what it's going to do at the 50. We can see pretty clearly that there was indecision and then there was decision. We know there's an extremely high probability we're going to be heading this way. LXK, Lexmark. Came down to the 50. Let's make this a little bit bigger so it looks more interesting. Did a doji, did a gap up, an inverted hammer, bullish confirmation. That's a very strong buy. Wouldn't be afraid to be buying this one on positive trading using the halfway point of this candle. Again, if it came back down through the halfway point, it'd be right back below the T line, number one. And it would be telling us that the sellers are still in control. We want to be back out of it. If it did that, remember, we're already in the oversold area. If it came back down, more than likely what they're going to do is come back down and test the 50 again. But I would suspect if this one opened positive and started trading positive, you want to be in it right away. ESI. Well, Shuzbutts. ESI. Oh, so this is the reverse. And the reason I wanted to show this one was the exact opposite. When they came back up to the 50, you can see there was immediate failure. There was taking it back down. So that's why everybody's watching these major moving averages to see what's going to happen at that level. We just have a better view what goes on. This one didn't resist at the 50. Went smack dab up to the 200, pulled back, right back smack dab to the 50. Now you have a doji, bullish engulfing, closed right at the T line. There's not a reason in the world I can't think of that if this opens positive, you don't want to be buying immediately. Now, again, this I'm going to start saying that a little bit more because if you sit here and analyze and say, all right, if this opens positive, I should be buying. You don't sit there and say, oh, but what if it pulls back, blah, blah, blah. The probabilities are, if this opens positive, they're taking this back up to test the 200. And if they're testing the 200 the second time, they're probably going to go through. So this should be one decision. Buy on a positive open. You don't have to worry about buying a quarter of a position, half position, three-quarters of a position. Just buy your position. Now, as soon as you do that, we've already made our assumption of what this pattern and this signal should be telling us to do. That it should be going higher. We should be in it. The next thing is, once it's going higher, or our next decision is, where should we be back out of this if it's not working? Probably, again, the halfway point of this candle, or even trading below or closing below the T line, because that's not what should happen after a left-right combo bouncing off the 50. It should open positive and trade positive. If it opens lower tomorrow, it's still in the bottoming stage with strong buy signals. You simply put your buy stop 1 penny above where it closed, because if it comes up through there, it's doing exactly what the chart or what the pattern said it should be doing. The moving averages, Jules, are you asking this for the benefit of others, or are you asking for yourself, Jules? This is the 200-day moving average. The blue is the 50-day moving average. The gray is the 20-day moving average. All simple moving averages. Those are the ones that money managers around the world use all the time. The T line is the 8 exponential moving average. That's our trigger line. That if you see a candlestick buy signal and a close above that level, you should be buying immediately. Let's see. You lost your charts. Jules. That sounds like something like the dog ate my homework. You consider a positive opening, what happened if it opens down, then in the first 30 minutes moves up. Yeah, if we wake up tomorrow and let's say the Dow futures are showing that it's going to open up down 30 points, and they open up everything down a little bit, and this one opens down here, yeah, you don't have to jump in. But if you start seeing the market come up and this start coming up, that's where you start adding your position. So my buying on a positive open could range anywhere from buying on the open to maybe 45 minutes later, watching what the market is doing. Okay. Yeah, if a stock price failed to break a previous high, that high is a resistance. Otherwise, it's not a resistance. But that's why you want to be able to see what type of trading action you get at that level, because everybody else is looking at that level to see whether it's going to be acting as a resistance level or not. Okay, let me, what did we just do? We did MTI. HAS. Another one, bouncing right off the 50. Hasbro. This is one I wouldn't be afraid to be buying, anticipating that you've got kind of this double bottom and the next wave is up. Probably well past this level. FVE. I have this here for a reason. And I don't know what it was. Other than maybe I've got it underneath rounding bottom. Okay, that's what's happened. That's what's happened. Okay. Yeah, a little rounding bottom, starting up the next move, SAPE. Another rounding bottom. And remember, there's a difference. That's why you want to know what pattern, the aspects of a pattern are versus a signal. A pattern is going to break out when your stochastics are probably in the overbought area. Whereas the other times we want to be buying a signal when our stochastics are down in the oversold area. Like right here. Nile. Another rounding bottom. There's a left-right combo. Stochastics nowhere near the overbought area. This tells you there's going to be more upside. So if this is your kind of your J-hook pattern, they're going to move this up off the screen. Same trajectory as this, and then once they get up there, now this is where you're going to make your fast moves. They're going to catch up to what the trend was. They could take this up very quickly, and once they get up there very quickly, then they go into a 45 degree, which is the same trajectory as that. Enoch. Enoch, this little rounding bottom right here. Notice one of the rounding bottom is doji, hammer. They're taking it back up. We had it right in here with that move. So when you see them pull back and indecisively trade and then move up, then pull back, that's good consolidation. That means they're still going higher on these. Did I skip MTI? What was, whoops. Bah humbug. MTI. S.MTI. Oh, it was MTL. Ah! MTL. This is going nicely. Well. Oh, we already did this one, didn't we? All right. So was there a question? Anyways, this is the target. The reason they're moving averages, they act like targets because that's where everybody else is watching. Speaking of which, I've got to check my cattle to see if they're, which I would anticipate they're going to come up to one of these targets. Vivus. Vivus is a nice strong signal. It can be bought on a positive trading and then use the halfway point of this candle as your stop. But this is I'll veer off one more time. I've just finished high profit signals quantified, which will be a 45-minute video on which signals are the strongest, kind of putting it in order. Even though there shouldn't be an order to them, there are the ones that we know work better than others. For example, the doji followed by the gap up, or the doji followed by a bullish engulfing, the left-right combo, or the kicker signal, or the flutter kicker signal. So that's going to be available to everybody here pretty soon. And part of that, too, is in the big profit potentials is when you see a large signal, that has more credibility that you're going to be seeing a good strong move after that. Anyway, so Vivus, a good strong signal. If this opened positive, I'd be buying it. I wouldn't want to see it close halfway down this candle. And BOIF, another big bullish engulfing signal right back here at the T line. This one, I would guess, would have a possible move right back up at least to the 200, right above it to fill this gap, which is still going to be a 15, 20%, even better than that, almost a 45% return. A few more that would be oriented toward the day trade is something like this. Except I think on TCNet it was closed. It's probably close enough. We've got a big doji hammer, gap up doji. Tells us very simply, if this opens positive, it's going to be coming up through the T line. You probably have a good day trade. At least you know it's going to move in the right direction. It might move the same magnitude as this, but at least you're going to at least come up here and test this level and maybe get into the gap area. So what you're trying to do is find good, strong signals that are occurring at an area that if it broke out through that area, left-right combo on Abercrombie Fitch. Very simple. You have a left-right combo. After 3 dojis, close right on the T-line. Stochastic silver sold. If it opens positive, the T-line is not acting as a resistance. You at least have probably a good trade. Now, again, in a day trade situation, first criteria is we want to find something that's going to trade positive. Second criteria, we want to find something that's going to trade positive and give us a good return. Now, Obviously, we're always trying to find a good, strong return, but our first criteria is if we put this trade on, the worst case scenario should be that we're going to make a profit. A left-right combo is when you have a doji followed by a bullish engulfing signal, or a doji followed by a bearish engulfing signal. Tells you they've done the little jab, and now they've come with that roundhouse right, telling you exactly where the force is. A large signal, is it the same as a large pattern? I don't know whether not necessarily. The signal obviously is going to be a one-day situation. Patterns you're going to be able to see set up, and it's not that it's necessarily going to be huge coming out. That's not true either. The larger the pattern, the higher the probability the price move is going to be that much greater. Would you use a lower time frame for your entry? Yes, that's all part of our entry strategy, that if I had time and I was looking at this and let's say it opened up and then pulled back, then I'd go to my 5-minute chart, my 10-minute chart, and figure out when the selling had stopped. And that would be when I'd start buying. EP. Another, ooh, that's not what I want. I don't know why I have this one here. Something is drastically wrong between the TCNet chart and this one, so I'm going to zip right along as if nothing happened. Now here's one that with a doji right at the resistance level, that if it was trading positive, you wanted to be buying it. It would make a good day trade, because if it traded positive after a doji, we know that's moving in that direction, and if it's moving in that direction, it's moving out into territory that it hasn't been before. You're probably going to usually make a good profit on that type of setup. VIAD, same scenario, right here at a new high with a doji. Stochastics are still coming up. So the question is, well, isn't this a new high, your doji at the top? Not if your stochastics aren't in the overbought condition. So you've got a J-hook set up that tells us if we open positive, what type of signal are we going to have? Anybody? If you have a big candle and a doji and it opens positive the next day, what type of signal are we going to have? Doji sandwich, yes. And a doji sandwich tells us that if they open a positive, this day and this day are probably going to be equivalent. So you know what your day trade magnitude could possibly be. Blackstone. Bah. There's a bullish engulfing signal. Inverted hammer, bullish engulfing signal. Right on the 50. This one you could be buying on positive trading tomorrow. BSAT. Why did I have this one? VSAT. Oh, because I think this actually on, this is goosey up with two different feeds. This was actually looked like a doji with a gap up last couple of days. Let's see. S.IN is that doji hammer with a gap up, telling you that we're going to be in a strong uptrend. And EFII. Doji, hammer, gap up through this resistance level. So these are all situations that you can look for on day trade type situations. And then somebody was asking today what they should do with MDRX. So if we know that if they bounce off the support level, we can tell this is a support. Let's see. Now I'm really lost. There we go. Because we can see the dojis, and then they took it back up. Brought it back down the second time. Acted as support. If they were acting as support, what do you think the next target was going to be? Up here at the 200. Well, we saw when they gapped it up at the 200, stochastics in the overbought area, where do you think everybody was anticipating taking profits? Right here at the 200. We would see that immediately, or could see that immediately, especially after it opened and it started producing a dark candle. You take profits. What's the worst case scenario? You take profits and then they take it right back up through the 200 and they're going higher. Nothing's stopping you from buying back in once it shows that it's not going to resist at the 200. More than likely, they're going to open this lower, going to be some more profit taking, come down to the T-line, the T-line crunch will push it back up through, and then you can buy back at that point. All right. Doji sandwich. Big day doji, they trade a positive. This candle and this candle are usually equivalent. And G and C. Big day doji, another big candle. So the doji sandwich is something to look at, especially if you're starting to see trading into a new high range coming off after a big Morningstar signal. All right, in this market, I have a few short positions. Fortunately, we've been short this one, INFA, and got this move, covered it yesterday. So that was a good percentage move. Again, based on the same simple criteria. You see a sell signal and a close below the T-line, you can start going short until you see a buy signal and a close above the T-line. And staying short on this one until you see a buy signal and a close above the T-line. Where is it going to? More than likely it's going to come down and test the 50. STX. This one was covered at one time and then reshorted because if it comes down through the ice and comes up and fails, what is that called? Anybody out there? Ice hole failure, exactly. And where's the next target? 200. So we already know where our target is. All we have to do is stay short as long as it doesn't close above the T-line. DEC was recommended to go short today. And would this be a good one to go short tomorrow? Yes, if this opens lower tomorrow, which direction is it going to move after a doji? You're going to have that doji sandwich possibility. Yes, candle trader, that's the way you remember blue ice failure is I always followed up. That was my buddy Dave Elliott's description of a blue ice failure, was that you fell through the ice and you couldn't get back up through it. Which one did we just do that was a blue ice failure? STX. Yeah, so somebody fell through the ice, came back up, and drowned because they couldn't find the hole they fell through, so they went to the bottom of the pond. So I always followed it up with, how do you catch a polar bear? You cut a big hole in the ice, and then you take a can of peas and you spread it around the hole. And when a polar bear comes down to take a pee, you kick him in the ice hole. Anyways, that's just so you can. All right, what else do we have? Angie. Stay short until you see a buy signal. We closed out when it came back up through here and shorted some more today as it came back down. What's, you try to liven up a room, and what do you get for it? And VHC. Again, that rounding top, this one's heading down further. If it breaks this level, then you have the possibility of a down move along this magnitude. Wave 1, wave 2, wave 3 could take you all the way down to the, probably into the $16, $18 range. MR. Is that the right one? I guess so. S.MR. This one can be shorted on weakness, probably taking you down to the 200. And Office Max just started to fail. This one, if it opens lower tomorrow, you definitely want to be shorting this one. Where are they going to take it to? Probably back down to the 50, which would give you a good, whatever that is, 18% return. And JCOM. Kicker signal to the downside. This one, if it opens lower, you definitely want to be shorting. Okay. All right. Do we have any questions on candlesticks? Anything I missed? Okay, if not, Jim, there you go. The blue double line. And Jim, do the second double line in 15 seconds. Okay. LVS. Another one that can be shorted on weakness tomorrow with the anticipation that you're going to head right down to the 200. I'm sorry, to the 50. Let's see, I need to do this. SanDisk. SanDisk, I wouldn't be long or short right now. It's trading too flat. Does not have a trend. You're going to make better money someplace else. Dean Foods. Whoops. Dean Foods, you can be shorting on any weakness. Hold on for Okay, sorry about that. All right, y'all have scrolled past me. Okay, Apple, that's a Dean Foods, is probably heading back down to the 200. Apple, stay short until you see a buy signal. UNH, oh boy, this one, as long as it stays above the T line, stay long. And Yahoo. This one is very precarious. It's doji right on the T line. Makes it very simple. It's going to move in the direction of how they open this one tomorrow. TXT stays short until you see a buy signal and a close above the T line. ETP. This one broke out with the doji gap up. Again, this is a perfect day trade situation where if you could see there was a resistance level right here after a strong buy signal, positive open, you could be buying immediately. SNSS. Nice rounding bottom. Doji, perfect for a day trade as well as a swing trade. If it opens positive tomorrow, you want to be buying immediately. And let's see what else we got here. Let's see. We did BIOF. This one you can buy on positive trading tomorrow. GEN. Nice rounding bottom also. Just make sure the volume's there. But you can be buying this one on positive trading tomorrow. That'd be a nice breakout. PLCM. This one you can be buying on positive trading. Kind of had that little gap down, spinning top. Now closing back up above the T line. Buy on positive trading. Don't let it see it, or want to see it close back below the T line. And I'll go over a doji sandwich. The next one we come across, which will be any minute now. Should you wait for news or use candlesticks? Should you wait for news or use candlesticks? Use candlesticks because, remember, candlesticks are the accumulative knowledge of everybody buying and selling during a specific time frame. So that means everybody that's buying based on news is making their decisions one way or another based upon that news. A lot of time you'll see good news and the stock will go down. And everybody say, well, why is that going on? You might not know because there might be something that wasn't as good in that report as you thought or what most people were expecting. And or it's a simple conclusion that you buy on rumors, sell on news. So you'll be able to see exactly what's going on in investor sentiment after a news report. LQDT, this one, you're in a downtrend until you see a buy signal and a close above the T line. Today was not anything that you would call a reversal signal. It's just it's a nothing day, just an up move and a downtrend. Caterpillar, same scenario. It's in a downtrend until you see a buy signal and a close above the T line. Facebook, S.FB. Facebook, very simple. If they open this lower, you want to be shorting immediately for two reasons, because it would be opening lower after a doji, number one. Number two would be breaking this support, which tells me they would be bringing it back down to test the lows. 90-year-old woman agrees on XOM, all right. This one, yes, kind of a rounding bottom. You got to be careful what your rate of return will be, but it'll definitely be in an uptrend. HLX. This one you can be buying as long as it stays above the T line. Notice how it's kind of broken out down through this channel with that doji gap up, and you're above the 50 and the T line. Wouldn't be afraid to be buying that one. U.S. Steel. This one had a left-right combo. Notice you got kind of a morning star, now a left-right combo. That means the bulls are in control. Probably did it right here at this support level. Next target right here. So you're probably in a long-term pennant formation, but at least you know what your target will be. So you got to decide whether that's worth the risk reward. CVX. Another one. It's got kind of a rounding bottom. You're getting some buy signals. Now all you want to do is see, I'd rather pay for it up over that breakout level. Let's see, JCXOM. What's JCXOM? Oh, Chuck, it could be a EDU. This one, whoops, that's not the EDU we're looking for. This one you stay long as it stays above the T line, but it better move up above it here pretty quick. But notice how sideways you're moving. So if this one doesn't show some strength, probably tomorrow, I'd close out the position. I'd put a buy stop up here somewhere that if it popped up, you're going to be catching it as it comes up through that level. Chico's, this one is a double doji. If this opens positive tomorrow, remember, a double doji is to take it up, consolidation. Then if they open it positive the next day, that's like a doji sandwich. They'll take it up strong. Ford, stay with this as long as it stays above the T line, which means it has to stay on a trader basis. It has to stay above the T line tomorrow. FXE. Did I do that right? The Euro Currency Trust. This one you stay long as it stays above the T line. And let's see. NIHD was our recommendation yesterday. It's also doing that double doji. Very simple. If it opens positive tomorrow, you buy it immediately. And CUR. Whoops. S.CUR. That one's kind of running out of steam, and as you can see, there's not a lot of buying going on. There's selling pressure here. I'd be out of it. If you like it, you sell it, and you put a buy stop up at the $1.50. If it comes up through there, you know it's gotten through all the junk area. IMC, this one you stay long as it stays above the T line. And BBBY. Bed Bath & Beyond with a bullish engulfing right at the T line. It needs to open positive to buy it. If it stays below the T line, you don't touch it. I wouldn't short it here, but I wouldn't buy it until you see it close up above the T line. Let's see, we did CHS, right? Yes, double doji. Cooper Industries, Cooper Companies. This one on the pullback doji, it has to open higher and trade higher to stay in it. If it opens lower tomorrow, you close out the position. CENX. This one, all you can do is stay short until you see a buy signal and a close above the T line. More than likely, it's going to slowly come back to the 50. How high can it go? I mean, they can take it up to the 200, but wherever it goes, I would still have a stop at one tick below today's low, because if it comes down through there, that means the profit taking has started. Halliburton, trying to bottom here on the 200, but it needs a buy signal and a close above the T line. Rig. Rig is still in a downtrend until you see a buy signal and a close above the T line. I don't know whether if you're short, you stay short. I wouldn't short it here. But you probably you need to get ready to cover. You're not quite in the oversold area yet, but you're getting close. Citigroup. This one you stay long as it stays above the T line. eBay. There was a big discussion about eBay. Are they having financial problems or something? This one you can short. There's your left-right combo. Close below the T line. Be ready to short this on any weakness. You might take a look at the, 47.50, 45 put spread. Rovi has just been slowly languishing here for quite a while. But you can buy it if it closes above the T line, because notice once it gets above the T line, it stays there. Once it gets below the T line, it stays there. So they'll keep it moving in that direction after they get above or below the T line. Body. This one you can be buying on strength. Kind of a Morningstar signal at the end of a flat trading area, which usually acts like a slingshot effect to the upside. So that one you want to keep an eye on. Adobe. Adobe, another one that if it opens lower tomorrow, you want to short it. You've got a left-right combo right up the T line, close below the 50. Bounced off the 200, but if they open it lower, they're going to move it in the direction of how they open it. If the T line or the 200 doesn't hold, they could be taking it down pretty hard. Now, it's getting close to a support level. So if you do short it, it better have a strong down day. If it shows any type of indecisive day, like a hammer, you want to get right back out of it and wait for the next signal. Fossil. This one's too flat. I wouldn't be long or short this one. No, the $47 day trading seminar fee does not apply to members. Remember, you're members. Now, there might be a small fee for the special session on October 27th for the scanning one, because that's going to be a longer one. And but on the during the month, during the school days, no, they're all free to members. Bank of America, stay long until you see a sell signal and a close below the T line. Let's see, did we do Hog? Hog, that's a toughie. But they've already started the uptrend, so I would suspect they're going to test the T line, then watch for the profit taking to be over. Entered on the gap up kicker. Should I close coming back down one halfway on the red candle? Gap up kicker. Gap up kicker. I don't see the gap up kicker. Is the gap up from the Harami? At this point, I wouldn't want to see it close back below the T line. Just use the T line as your stop. RIC. I don't know how much volume you have there, but it looks like it's trying to support here on the 50, but I wouldn't do anything with it until it does close up above the T line. CSX. Whoops. A left-right combo, staying above the T line. You can be buying this one. You know your resistance level is right here, so you got to remember or kind of calculate what type of return that would be to get to that level. An international paper. Stay long as it stays above the T line. Let's see, we've done BAC, we haven't done GE. GE, you can stay long as it stays above the T line. If it opens lower tomorrow, I'd close out the position. McDonald's. S.MCD. McDonald's trying to come back up, but McDonald's is another one I wouldn't trade because there's not enough price movement in it or percentage movement unless you're playing the options. And even with the options, this one looks like it's probably stuck between the 200 and the 50. I'd be someplace else other than that, or other than McDonald's, other than the fact that I eat there 3-4 times a day. This one you stay in as long as it stays above the T line. CTCM. MCP. Whoops. S.MCP. Ooh, MCP. I gotta make this steeper. See what we got here. I wouldn't do anything with this one. There's no signals down here. You're not above the T line. You're still below the 50. I think there's probably better ones to trade. OVTI. Another one you stay short. As a matter of fact, you can go short on a weaker open tomorrow on this one. GPOR. This one, doing the bullish engulfing signal. You can buy on a positive open. Use the halfway point of today's candle as your stop because that would bring you back below the T line. GME. Nice little scoop pattern. This one you can stay with as long as it stays below or above the T line. And you can be buying this on a positive open tomorrow, especially if they gap it up. If they gap it up into new territory, you know that this is wave 1, wave 2, starting wave 3. We did hog. All right. And let's see. TXT. Stay short until you see a buy signal and a close above the T line. Okay, I think we got most of them. I think we've done all. We did EPT. We did SNSS. All right. Hey, Yeah, if you're not getting the emails, email Abraham at candlestickforum.com and say, make sure I'm on the members mailing list. If candlesticks buy, but major news out or earnings next day. If candlesticks buy, but major news out or earnings next day. Marilyn, I didn't get the gist of the question. All right, let's see. Oh, did I ever answer that last left-right combo? I'm pretty sure I must have. If you have a buy signal, but news coming next day, should you follow signal? You should probably follow this signal because remember, it's the cumulative knowledge of everybody buying and selling during that time frame. And if they're buying, knowing that there's an announcement the next day, that means they've probably got confidence there's going to be good news. The other side of that is you can always buy after the news. You might miss a gap up, but at least you know which direction they're taking it. And then the third alternative is if it's kind of sketchy on what you want to do, because of the simplicity of candlestick scanning, you should have at least 3, 5, 7, 10, 15, 20 good stock situations each day that you can go choose from. But if one has some elements of higher risk to it, just go on to another one. You don't have to get into every trade because you're not going to be right on every trade, and there's some of those trades that you're not going to be right on have the possibility of being a big loser. Remember, if you can keep compounding your good trades, that compounding effect gets very, very big. Should you use limit on sell stops? No. If you want to get out, get out. If you put a sell stop limit and it goes through and it goes down way past where you know it should be, and they didn't do you at the limit, you're still in it. So if I see something where it's time to get out, just get out. If it's going to give you still a bad fill of getting out because it's moving so fast, that's the playing field. Yeah, just use a sell stop. All right. Okay, everybody, I hope we got some good information out to y'all. If you are interested in the private trading session, send me your phone number. I'll give you the details. And yes, that's it. I know you enjoyed the jokes, so you'll probably be back here next time. Everybody have a good evening.